What you put in is what you get out. It's a direct ROI. You can't fake it. Don't trust social media all the time. People always talk about their successes and screenshotting the green sea that they have on their trades, but they never show the red. If you're a Web3 company, you should make us feel like we are stepping out of the Web2 world. Make us welcome that this is really a truly Web3 experience. People believe in authenticity. They people who grew up watching Messi. You don't need to introduce me who is Messi. I believe Messi, so I believe Bitget.
Hello, welcome to the show. I'm your host, Vugar Usi, and today we have two presenters together. How is it to be on the other side of the hello from the other side?
So hello, everyone. I'm Adel Bhurtun, founder and CEO of Trader Brawl Media. It's really interesting. I've always been the person inviting people to my podcast, but for a change, I'm now being invited to do as a guest. It's really cool. I know how you think. I know how production looks like, and I know all the complexities that come with that, the challenges.
You know, all the time when I have someone here, I try to send like questions before, and they come here, and the conversation goes to a totally different direction.
Yeah.
And I hope we have a great talk today. But
Yeah.
to begin with, I have a question. Like, you create content, and what I love about your content, it's not much about, oh, this is next 100x and put your money here. It's less chilling and more like an education and more like a heart-to-heart talk. Where do you see this entire crypto narrative happening today? Like, where are we at?
That's a good question. I think from being 2 years here and 5 years into the industry, before this I was working for the FCA, we're seeing a big movement, a shift towards more regulation coming in, because now you're seeing the US actually taking into account crypto. The fact that BlackRock has already very much put forward that it is supporting this new emerging technology, and now Biden, turning the tables and now accepting crypto. We're seeing, but at the same time, it doesn't mean that no regulations will come in. If governments step in, they will be contaminated with regulation. I feel there's going to be some DeFi projects that may not be able to thrive like they used to before the government has stepped in. DeFi is all about no KYC, no need to submit any documentation. But as soon as you're regulated, all the KYC data stuff has to be submitted.
Like, what's gonna happen? Like, we always talk about it, but like, in my opinion, like, more you kind of oppress, more things go underground, and it becomes very hard to kind of control things. And we know what goes in like a drugs and like, illegal actions. I don't know, even like a dirty money, all these things. Like, more you oppress, more things go undercover. And with the decentralized world, especially if you don't try, kind of an off-ramp or take it out, put into your wallet, if it is a long-term strategy, buying and selling between the parties that they're comfortable to exchange within that ecosystem, it will be more dangerous, no?
Yeah, you're right. It's a good statement to make, but at the same time, in order for crypto adoption to take place, right, the real money comes from institutions. But in order for institutions to come in, they have to come in legally, and so legal proceedings, like legal structures, have to be in place, such as VARA, Virtual Asset Regulatory Authority. The DFSA is also behind this. Was established as a body organization to help with the licensing of crypto companies. If there's no VARA, then there's chaos. You see, at the same time.
I do agree and disagree at the same time,
Yeah.
but I think as someone who represents one of the biggest centralized exchanges, I do love the narrative, because it's always like, oh, like, we are all degens, and at some point things should go, like, your keys, your assets, and your whatsoever. And I always say, like, whenever we talk about mass adoption, tomorrow you want to go and interact and pay at a restaurant, at a retail shop, I don't know, a mall, for your hotel, you will need that institutions talking to institutions and established organization, because it's very hard to think about another big institution like BlackRock going and buying it, some assets from the decentralized world without knowing who they are. And as an exchange, we have seen so many times that because you have all the trace of the transactions, and you will see that, okay, this, let's say, X asset or Bitcoin that's been went through scammers and that wallet got stained, and now people, even they hold that assets, you can't trace it fully back, and things happen, things get very complicated with authorities and limitations. Therefore, it's always good to have that, layer of protection. It protects the user and we know who we are, but at the same time, do we really need to know that much?
Yes, well said. And this is where ZK KYC comes in, zero knowledge, know your client. And the way this works is, instead of having to submit so much documentation about yourself, your data, what we can use instead is we can use references that shows, for example, you are above 18. We don't need your whole passport to know you're above 18. We don't need your mother's maiden name, your date of birth. Yes, we can have smart contracts in place just to show date of birth only, or a range that says, oh, from you graduated in this year, so we can indicate that you are above 18. We can tell you're above 18. We don't need your documentation, because in one ID, there's a lot of information in there.
Too much.
Too much. Why do you need to submit all when you just need one bit? This is where ZK KYC comes in. I'm very bullish about it.
That's good. That's good. I like how you're like a subtly shilling. I like that, like a professional shilling. Like learn. This is how it is done.
Get on this right now.
That's really cool. But like, to begin with, like, how did your crypto journey started? Like, how you came, and I know that now you're like working out and doing like fitness and thinking like putting things on chain in different levels. But like, where did it start?
Okay. So I initially started in London. I was there for 13 years before Dubai, and I worked for the FCA, the Financial Conduct Authority. They are the regulatory body, and I was in charge for authorizations of the applications that would come in. I would oversee who they are, who the founders behind the project, and I will have the power to approve or reject if they're allowed to work in the UK, actually like license. I was the one to give out the license, like the crypto police,
I am the company. I am the VARA.
Imagine, no, VARA has the right to say no or yes based on your application. It's a lot of power. Of course, we're a team, but the decision-making process would be, what are your capital requirements? How much do you meet our capital requirements in order to register? Do you satisfy MLRs, money laundering regulations? All these money laundering, counter-terrorist financing, CTF, was very much in place in order to get registered. So with this knowledge that I had, with this power and these databases I could see, of course, you can trade on insider information too if you wanted. It's a lot of information.
I'm sure it was illegal though.
But this gave me an initial training ground to understand what is crypto, because I had to. If I didn't understand it, I cannot give my opinion on your application. Now, initially, after this, I started looking into some exchanges where I can actually trade and have some skin in the game. So I had some wallets that I started using. I started now understanding that with these wallets, you can centralized wallets, you can actually earn on your interest, so stake, which is so much better than having your money in the bank, which is earning at zero annually. This gave me more motivation to explore what other coins I can maybe invest in, some other passive income streams. And then I bought my first NFT in, I think, 2019. So recent, not so far away. Using MetaMask. That was an interesting experience. Cool. I can say I own this. I can prove it. I got a certificate. It's just a certificate to show that I actually own this. Now, I fast forward to now Dubai, having been through lots of work and networking and, seen many things, seen many projects, seen the bull run. I felt Dubai was like a stepping stone. England was like a stepping stone to Dubai, because Dubai is very open.
Dubai is like an ultimate level 800.
Exactly. It's very open, very progressive, very emerging, and very accepting of technology. So with that, I am here. And I started an agency. I thought, why not? Let's get people, projects, and let's talk authentically about what you're building in this space.
Honestly, I think like having an agency is such like a bull run business idea.
Yeah.
But like I've seen you, survive the bear market. Therefore, you've been around enough,
Yes.
to have that. But I believe that, like, because I've been in crypto since 2017, like every bull cycle, I've seen so many agencies coming in, and bear market, they just disappear because there's no more money, and then they reappear again. And I was recently in Lisbon, I saw like some of like really old friends, and I'm like, oh, what you're doing? You were doing project, and they're like, no, we're just now doing like this new cool agency, that this new AI thingy.
I know. Everyone's having an agency. I realize it's like so saturated. You have an agency. You have an agency. What makes my agency different? So initially starting out, I wanted to do an agency that combines fitness with financial freedom, right? The triple F, fitness, financial freedom, triple F. And unfortunately, I'm seeing a gap in the market that no one is doing this. Who else is doing fitness with financial freedom? Do you know?
Now, I know a lot of people who rent a fake cars and make fake videos. You know, for sport, you can't fake it. For sport, either you really go to gym and you have that beautiful body that I haven't, for example. But with everything else, you can easily fake the success. And I think that there are like, for example, education. You can't fake it. Either you actually went 4 years to that university and did it, or you didn't. With the physics, with athletics, is that either you really did it or you didn't.
Or you didn't.
But with everything else, especially in Dubai, you can just rent a villa for a day, buy a friend for a day, go to club and open that bottle for a day.
Yeah.
And you can produce so much content. I know people who go out with 2-3 t-shirts, they change because they want more content, and they'd be like, oh, we are partying every day. But like, you actually know they don't. They can't even afford it in order to portray that rich, beautiful life.
Very true, and it's really well said what you said there. With fitness, your body, what you put in is what you get out. It's a direct ROI. You can't fake it, unless even with steroids, you still have to lift the weights, even if you have steroids on. I'm not saying I've never used steroids. Otherwise, I wouldn't be able to fit in this chair. But it's a direct ROI. And I thought, look, let's bring guests on the show who are active in this space, who show that they can do the work-life balance. They're able to maintain, like going to the gym, feeling fit, mental, and give some wisdom about how to stay fit while being a founder. Because being a founder is a very lonely job, very like time-consuming, resource-intensive. How do you make it work? I want to learn from you.
My all-time favorite is Matthias Mende. I had him also on the show. Like he does like an ice bath all the time, and like I love his energy. But like talking about like steroids, I like crypto, especially the projects, especially this bull run, is more about narrative, hype, building community, building that story, and shilling, especially like a meme tokens. They are kind of communities on the steroids. And you work with a lot of community building and content building. Like, what's the difference? Like, why these projects are so successful sometimes to bring so many people on board and make them buy, make them trade, and their tokens go to skyrocket without utility or anything, just because they could build a hype and story, and why others can't? I
think the one thing that I'm going to speak from my perspective, when I see a project before I invest, I look at the team. Like, who are the team? Who are they? Are they doxed or undoxed? And also, what are their credentials? You know, where were they before this? Because at the end of the day, you're not investing in companies. You're investing in the people running those companies. A company is just an entity, a legal licensed entity, paperwork, but you're investing in people. Ultimately, it's the people who run the stuff. So number one for me is, who are you? Can you explain to me who are you and what you're doing in one sentence? Or you have to work around it and give me a sloppy explanation. That's a very, very, very one thing. Why they're so successful also is also how they partner with brands that are have existing communities. So they have like Bitget does have an existing community. I think Bitget did a thing with Messi. Is that right?
Yes.
Yeah. Look, why Messi? Why did you choose Messi?
Because Messi has
a big community. He can fill multiple stadiums. So that's another reason that people believe in authenticity. They people who grew up watching Messi. You don't need to introduce me who is Messi. I believe Messi, so I believe Bitget. Done. It's already an icebreaker. So that's another reason. So people, credentials, people. I guess KOLs, partnerships, and then also the managing of it. So content needs to be there. Like, you're creating content right now. You're always creating content. I see this. It's a hustle, but you do it. You're successful at it, and people need to be fed. We're humans. We all need to consume. Who's the next guest, or what's next for Bitget? That's just human nature. So these three things, I believe, really are the recipe for success.
But when we talk about this recipe for success, like I believe most of the people who invest, they don't go and check the founders and maybe they consume that content and probably they just heard from someone on Twitter, someone here, word of mouth, a lot of key opinion leaders, influencers, I don't know, whoever they are, because most of the time they do have an interest in a project in they themselves. And there were so many cases within the industry where they'll be like, oh, I'm really bullish, while they were like selling the tokens and still, you know, kind of try to force the community to go and buy. Like, where does that transparency and actual leading an opinion or shaping an opinion comes in place, where someone just has an audience and milks it?
No, it's very true. Have you heard of Coin Bureau? Right,
of course.
Guy from, you must have, yeah. Coin Bureau, I think, is a credible source. I like to believe so. And if Coin Bureau is mentioning a project, I know they would mention it legitimately with an intention to say that go check this out. In the sense that, yeah, we've done our research. We are happy to not necessarily shill, but we're happy to give it a shout out. Go check this out. We're partnered with them. And if you've watched how Coin Bureau has successfully grown its channel time and time again.
Yeah, they're in millions.
They're in the millions for a reason. Every content that's come out has been so informative. You know, massive shout out to Guy, who I've met a couple times here in Dubai. Done a great job in his team. If you have people believe in authenticity. End of the day, there's another person who you did a podcast with, that Twitter guy. Is it Jack? Right, Jack is quite very active on Twitter. I watch his space. I look at him on what he's tweeting about, and he says his opinion. So I've met him. I've shaken his hands before. I would be more inclined to believe his opinion than a cold opinion from someone I don't know. So in a way, you're right. If you don't need to check the founders, if Jack is investing, if Vugar is investing, okay, take my money. In some cases.
Yeah, no, I believe everyone should do their own research. Like, don't trust people.
Yeah,
don't trust people,
yeah.
because, like, I'll tell one thing. For example, on Bitget, we have a very strong copy trading platform. More than 150,000 traders. They publicly share their trades, and you can go and copy, and you know how many profitable trades they had and what they lost. You know, it's never this like a beautiful butterfly, but like
Nice show.
I never saw any KOL or Twitter or YouTube influencer telling what they lost. Everyone will always talk about that one trade that they 10x, 20x, 100x.
It's so true. Yes. This is something I also spoke about on my podcast time and time again. Like, don't trust social media all the time. People always talk about their successes and screenshotting the green C that they have on their trades, but they never show the red. This is why you should always take it with a pinch of salt. Also, you never know what insider information and how connected they are with that project. You know, did they get free tokens to shill this? Was there an agreement in place? You don't know. KOLs and opinion leaders, influencers and the KOLs. This is a topic of big debate, whether to trust them or not, because you never know what happens in the pre-sale. There's so much private pre-sale negotiations in place. What you can do, like good sources like Coin Bureau, who are not, they are in a KOL, but they don't actively shill. They're not like, you never see Coin Bureau saying we're invested in this. Maybe Simon says, this is my portfolio. I've got Polygon, I've got this, I've got that. But they never actually show companies, not that I know of. So in that sense, they do their research, then it's up to you to decide. And that's how I believe is a good way around this.
Talking of portfolios, what kind of portfolio do you have?
It's a mixture.
We don't need numbers, just like a general overview.
Sure.
I don't want anyone like go after you and try to try to do something.
Sure. No, a few NFT projects. I'm quite interested in the, Gym Bros. They're nice. Gym Bros, like an NFT gym-based, fitness-based NFT. And then I've got my altcoins. My high market cap, my mid, and then some meme coins I put aside for diversity purposes. I've got some stable coins. I earn in stable coin as well. And then some on the other side, I've got some stocks, boring stocks that just are good to just at least not lose money in the bank. Keep it there because I'm already there invested. I don't want to take it out. I keep some there for like a reserve for a bad day. And then I have another fund that is actively looking at early stage companies, looking to invest in early stage. I'm more looking into the fitness with Web3 space. And this is, I feel, no one is doing. I'm really passionate about this. I invest in my passion. So this is like an overview of what I'm interested in, what I'm taking it forward.
When it comes to like a trading and, you know, like today's market, like everyone is like, I've talked to a lot of people and I see that everyone is like, when you talk about meme coins, their eyes are like a sparkling because justification is that it's the only chance to do another 10x because probably Bitcoin won't do you 10x in, I don't know, 3 weeks, 4 weeks. And I don't know why people are still into that, you know, hype of invest $100, become a millionaire over the night.
Yeah, I know. And I think the reason is that, you know, people are sort of going against the establishment of the 9 to 5. The 9 to 5 is sort of getting outdated, even though it's a very stable source of income, but they don't want to sell their time to be a slave to their employer or job. So
even trading is a full-time job. Like even building a startup, it's longer than 9 to 5.
True. But the thing is, you're benefiting directly. Yeah, your time is what you put in is what you get out for you, your portfolio. Whereas working for a company, depending on which company, when I worked for the FCA, I had to declare my assets. Bro, I had to declare, what are you invested in? Because I'm working for government.
Because you had too much information, otherwise you would go...
Exactly, trade against it. I had to declare that, bro, that's my privacy. Come on. But I can understand. It's a government job. You don't want conflicts of interest. You don't want to accept a firm that you're invested in, you know, approve them. I understand. Now, working the non-9 to 5, the full trading, you don't have to declare any assets to anybody. This is your life. You make a trade, cool. You make a loss, okay. Learn from it. But you're always learning for yourself. You work for a company, you just chase paychecks. Paycheck after paycheck after paycheck. But nothing really for yourself, you know. So I think the meme coin hype is one reason for... there's this documentary called Not Financial Advice. Have you seen that?
No.
Oh, it's about Dogecoin. Love it. I watched it. It's really recommended. But the guy himself was a Dogecoin millionaire, and it's documented. It's there. But he didn't cash out, right? He was just thinking it would keep going and going and going. He doesn't understand that there's a bull market, there's a bull cycle, there's a bear cycle. It's time to take profit. There's a time to enter. But it just shows that he made, I think his peak was 3 million in that documentary. He didn't work a 9 to 5. He was living in a small little shed, right? But he made $1 million. He was on the newspaper. Unfortunately, he didn't cash out. I don't know where he is now. But the fact that he did this, people have now reached, based on his documentary, people have reached out to him and said, hey, we want you to be a KOL for us. Okay. Is that a 9 to 5 job? The KOL is fun.
Is it fun? Honestly, like I have a lot of friends who are doing like a full-time content creation, like an influencer marketing, and amount of time they spend to pitch.
Oh yeah.
I don't know, invoice, chase, send revisions, work with the company, agency, whatever they do, go attend events, speak. It's so much work. Yes, it is definitely fun, especially if it aligns with your personality, who you are.
You get to travel.
You get to travel. You get to travel first class because some meme token projects have enough money to fly you in.
See?
But again, it's a hard work. Like no work is easy. And also, I believe it's a risky work. And I always tell to people who like want to enter the market and they're like, I always say like, don't just quit everything, buy a laptop and tell, okay, today I'm becoming a trader. Like, start slowly, I don't know, dollar cost averaging, understand how market works, because crypto is really, really risky and really volatile because one tweet can do things. And recently my friend sent me this video where the guy who was teaching trading and tells his team that 1, 2, 3, 4, they're shorting something. That market we're gonna go down, and it actually starts, very long green candle in that very second. And the guy's like, you see the stress in his face. And I'm like, this is the best learning lesson. Like people share it on social that, he's telling he's a guru, but actually for everyone else in his class, it was like a great learning curve that no one exactly knows what market gonna do, and it can really go up and it can really go down, and we know what happened in last bull cycle.
Yeah. No, it's annoying. It goes back to what I said. Always do your due diligence, but base your due diligence on YouTube is a great resource. YouTube is a fantastic resource to look at projects. Coin Bureau, I keep mentioning because I really support them. Because they don't actively say that they shill this. They just say this is what's happening, so we can expect, or blah, blah, blah. There's a chance that this may happen, but they never say for sure this is going to happen.
But also, like, when you are such a huge media or such a huge influencer with a 3-4 million audience, probably if you say something gonna go up,
of course,
it will go up, even for a brief period of time. And no secret, I know, like, in the industry, there are several VCs that are backed by the QLs, which act as LPs and GPs. They'll go and invest to the project, and they'll start promoting, and you'll see literally like a price going up because they're holding that assets, and they do a lot of, over-the-counter deals. And there's like so many things happen on the back end, like a background, like private sales, different sort of deals, that for the end user, sometimes I believe it is not as transparent as it should be. Even though we talk about like, things are on chain, you can go. First of all, you don't have that much time, and there's too much information to review. And most of the projects hold this kind of information from the retail user, end user, about what are their lock periods when their VCs are gonna chill. Because sometimes you can just buy and project is really good, but maybe it's a VC wants to cash out, or it's like the really single large investor. What you gonna do? How you get this knowledge?
Yeah, I did a Twitter space about how VCs, are they fair to the retailer? Because VCs are always at an advantage to us retail investors. VCs are well more connected, more knowledgeable, and they have the ability to influence single-handedly because they have cash ready to just pump and dump. When the lock-in period is in place, it's good that money is locked in place for some time. But what happens after this lock-in period? They're allowed to cash out. It's their money. There's no legal, requirement that says you have to keep your money in there. VCs can turn their backs on you anytime. That's the one thing. When you know that this project is VC backed, always check the lock-in, dates. When is the lock-in period? When is the non-lock-in period? How long can you stake for? And who are again, go back to the credentials. Who are they? What's their past behavior like from other investments? Can you use the past to sort of predict what they're going to do next, predict the next move, like game theory?
Yeah, that's very important, because I think VCs in a crypto sphere, they act very different than the traditional VCs, because in traditional, I come from a Web2, like a startup background, and that VCs on that journey, they'll be there for a very long time. We know that, for example, Figma, right? One of the big creative tools, and we, as a Bitget, we use them a lot, and I partner with them, and I'm actually gonna also attend the config conference and talk about what happened. Like, they've been backed by VCs for so long, for years and years and years and years and years. They spend around like $5 to $8 billion with zero profit, and no one exited. And then Adobe was about to purchase them for $20 billion, but that deal didn't went through, and they're still kind of back, and there are still VCs backing them. Because also in traditional Web2, even VCs, if they exit to another VC. They can't just go and dump, and there's no tokens. And VCs, they are always for a longer run. Imagine all the VCs that were investing in Uber, in Kareem, and all this Airbnbs. They never were there for 6 months, 8 months. But in crypto, you see that VCs will be thinking about a 6 months lock period or 8 months lock period. VCs want the similar deals that retail gets, but they also have a lot of influence, a lot of power, a lot of money, which puts the founders in a very, very difficult situation sometimes. And whenever I consult like VC the projects, I tell them like be careful with VCs because yes, money is nice, especially when you are founding or you're building something. You get excited. You are like, okay, I'll get this much money. I'll hire 5 more developers. I'll do 3 more campaign. But it is very unfair to expect crypto VC to crypto venture to create a demand for their tokens, have a product, have earn money, have utility in 6 months, in 8 months, while from the traditional like startup, we don't expect them to make any money. Like it took Amazon, 15 years or something to just make their first money. I believe it's also very unfair and very fast moving. Therefore, being a founder in crypto is very hard.
No, it's a fair point. Investing with VCs has that consequence that they can dump anytime. Well, depending on the lock-in period. Going for a loan has its own set of consequences, paying interest and loan repayment. And if you don't, the interest just increases. Also, interest increases can increase every year, right? Depending on inflation and things like that, cost of living rises. The only 2 outcomes, generally speaking, are VCs, yourself, you're bootstrapped, or you take a loan from the bank, or your family and friends, But what choice do you have? People go for VCs to say, we are sponsored, we raised 1.6 million, this is a celebration moment, hype, so we raised this amount of cash. So it's like marketing in a way, but they don't think what could happen.
I was at an event, was talking to this beautiful company. They're like cash positive and so on and so on and so on. They're like, oh, we are raising. And I'm like, why? And they're like, oh, because we need validation. We need someone come and tell us how much we are worth. And I'm like, that's a good reason, enough good reason. Just you need someone come and tell you are now worth 50 billion, don't know whatsoever price tag coming on. And honestly, I still believe the working with VCs can be tricky, but they're very important because they know a lot of people from the ecosystem. They can recommend, right people, right teams, help you connect. But you have to be, as a founder, be strict and understand what you want to get out of it, how you want to get invested, what you want to do with that money, how much money you actually need to raise. Because I've seen sometimes project would raise more money than they actually need, or sometimes they wouldn't use it as planned. Because in traditional setup, if you raise fund, you'll do, okay, we have a 1-year runway. I never saw a crypto venture with a year and a half runway, unless they're like a layer 0, layer 1, doing super something complicated. Therefore, I believe when we talk about a founders and looking back into founders, there's a lot of lessons to be learned. But also for the founders, I would recommend them to learn from the traditional, what's happening in the traditional industries like a Web2 or a startup ecosystem, and apply it to the crypto, because crypto, in my opinion, shouldn't be cyclic. It shouldn't be everyone is excited for 6 months, for a year, and then go to hibernation for 2 bear markets.
No, I agree with that. Another point I raised in other podcast sessions is that how many of the projects that you know about that have their own token, ICO is already launched and everything, how many of these projects, when you invest in them or you decide to invest in them, do you actually use their token? Do you actually use it for the purpose that it's intended, or do you just buy for money? You trade it, wait for it to go up, then sell. Are you actually, there's two, I don't really know many people that I know of actually use it for the purpose of what it is intended to do.
But I think, especially at this bull run, and especially with the newcomers to the industry, it is wiping out. People don't care.
Yeah, people don't care.
It's only about what I'm gonna buy and how much I'm gonna sell it for, what I'm gaining in between.
Yeah.
And why I'm saying that, because recently I saw a pitch deck, because at Bitget we have Empower X fund. It's $100 million fund that we are investing to ventures. And the pitch deck was showing if you buy it in pre-sale, you earn this X. And I'm like, you are not a financial venture. If I'm investing, I shall be investing because I believe in your ethos. I believe in the product you're developing, the problem you're solving, the difference you're gonna make. If only reason I'm here is for money and making X's, it means I'm gonna dump it in a first occasion possible, and everyone else, and then you'll have only a very short period of the time to do something.
Yeah, it's a fair point. This is a very one of the challenges of blockchain, as much as I am an advocate for this industry, if you do not have a proper monetization plan to really fulfill your promise that if you invest this much, you will earn this much early. Yeah, you get a reward for investing in early, but do you have things to back it up that you will actually earn this much if you invest this time? You know, do you actually have things in place to evidence this, or you're just saying this like, get the money quick as possible? And I think that is one of the biggest dangers. Get the money in, promote it, validate it, show the validation. We raised X amount, get the validation. Okay, now we're all celebrities. Fly first class, go here, go there, go to every networking event. But when are you actually going to give back the money to the VCs? They're entitled to their money that they injected. You know, what are you doing? You're hiring more people. Okay, is it bringing money? Is it actually? And this is the challenge. Like, and did you do market research before you launched this? In the Web2 world, before anything, market research comes in place. Surveys, going them, field work, product market fit. Web3, launch a meme coin first. Use ChatGPT to write the white paper, maybe. No need to show our faces on the website. Just on docs or undocs it. I don't mind. Put Twitter handles, and then let's all pump it, guys. Let's pump this up. Cool. We're a community. We're the next Dogecoin.
We're the next Pepe and.
Yeah. So
you mentioned this briefly about like going to the networking events, and like the events are such a core part, especially in Dubai. I think if you are not participating, you are not even, you don't exist. Who are you?
Yeah.
And it's like a same gang going from place to a place.
Yeah.
And like, of course, nothing against the events. I really love, there are very many good quality events happening there. But also you mentioned that when you invest, you want to use the coin for the way it's intended. I've been to so many conferences that talked about NFTs. They still had QR code, tickets for the event.
Right.
And you'll go to so many events that, you can't even buy a coffee with the crypto.
Right.
And you'll be all of us telling there that it is future, it's happening, it's today.
I wrote a post about this, actually. You read my post. Maybe you did or didn't. I literally wrote a post and posted a video saying, where's my POAP, my proof of attendance protocol? I go to so many Web3 claiming events. None of them have given me a proof of attendance to say, this is your certificate that you came to our event. Cool. There's only one that did it for me. That was Algorand, Decipher, in 2022. I was at the Madinat Jumeirah. Kudos to them. Every other event, I'm not going to say names. I don't want to, shoot myself in the foot. They don't provide that. They don't provide tokenized coffee. Like, you can buy coffee with tokens.
You can do nothing. Like, everything happens in like a Web 0.
Exactly. So I've been very against this, and I've called out, not organization, just called out this consequence that if you're a Web3 company, you should make us feel like we are stepping out of the Web2 world. Make us welcome that this is really a truly Web3 experience, and this is something lacking in Dubai.
I believe it lacks in many places because like I attend a lot of events. I speak, I do keynotes. I know anywhere from Rio to Mexico to Thailand, it doesn't happen. And I always say, and also with the media, like, we see so many pitches. There are so many like a good quality media, but I say like 99% of crypto media, they're Web 2. They're Web 1.5. Like they're nowhere near. Like you rarely see a true like anything Web 3. Like yes, some of them have, I don't know, the header images of the articles available as an NFT piece of something, but like none of them is like a core business, and none of them is actually truly embracing all the opportunities and possibilities that out there. Or if they do, it's like very rudimentary here and there, just, I don't know, like for the sake of it, without actually thinking, okay, am I a Web3 company? How I can become a true Web3 company? How I can do things, I don't know, most of the places you can still log in with your emails and mobile number, and then you will see that these people come and talk against centralized exchanges who do that, while centralized exchanges do much more for adoption than a media or like an event company that can't. It's easy. Like even I go try to buy a ticket for really, really high quality events. I love them. We all go. It's very important. But they're so lazy to integrate any crypto payment.
And the worst part, the funniest, is some of the Web3 companies listing their events on Eventbrite. Not even Luma, still Eventbrite, you know? There are many platforms out there. I will show one, NFT Connect. It's a platform I've used before. You can list your project there, and when people list it and people show their attendance, you get a little digital badge, just like a POAP in a way, that says you are attending, you are registered. You can show this and show it as your ticket if you want to. It can be a picture of you, it can be a picture of anything. It's generating on the spot generated NFT. Really cool. Luma doesn't do this yet, but Luma, you can connect your wallet. You can pay in crypto with Luma. I use Luma myself for event hosting. Really good. But Eventbrite, still using Eventbrite? Oh, I just go for the networking. Big or small, I think there's still some merits in networking if you are trying to still build your community, chill and talk to them about what you're building in this space. If you know, especially as a startup. So big event or small event, I still attend for the growth of my company.
But attending, that's the thing. Like, I think like events are like a bone of the industry, just to connect with people, especially like Web3. So decentralized, I don't know, work from home culture. You barely meet people other than if you go to events. But I believe events should kind of stop being that cash making machine, definitely there for profit, but like embrace actually the technology, because I know that events industry been here forever, and usually these agencies that put together events, they will do, I don't know, healthcare conference, and next day they'll do finance, the third day some Comic-Con convention.
Yeah.
They're professional in that, but like I believe if you are serving Web3 audience, we should talk about it. We should tell that, or actually educate the founders, organizations. As a CEO of Bitget, I do that. Like whenever we sponsor an event, we partner with an event, I try to give a feedback to organizers, like this could be actually, there is a solution for that, or we are listing a cool project that could actually solve this problem. And I think all these projects and organizations that go to these events, they should work with the organizers that, okay, next edition I can do this. Sometimes you'll go a nice booth, they talk to you about the solution they have, but they wouldn't actually pitch it to the organizer. And like, do it. You know, like look for more ways to actually put your product into the work that people can actually experience it, rather than talking only about how your token is raising or how you're gonna solve a project or problem in the future. Because in my opinion, yes, it is about the money. It's like a financial ecosystem. Everyone wants to make money. And there's nothing wrong with that, but like how you make money is important. It shouldn't be that, okay, it's like a bull run, let's put money, let's try to get out as quick. So many people like trying to invest, and I'm like, they talk about like this, like, oh, when is the cliff? I'm like, why do you care? Like, you should invest because you love this project. They're like, yeah, but like last time it happened to me, I burned, I want to be out before the bear market starts.
No, I agree with what you're saying here. There's a few parts there. One, we agree that the organizers should really start to include Web3 elements. So integration of crypto or NFT POAPs. That's one. Two, I will add to this is vetting of the booths. You know, one of the expos, I'm not going to say which one. One of the expos I went to, lots of booths, huge, full of all. It was a big, massive event, great venue in Dubai. Many booths were promising an APY of 75,000. Come on, an APY of 70 if you stake.
But like that's against. Unless you are like a Ponzi schema, you can't do that.
You can't do that. Yeah. The point here is that the organizers didn't care about what your project is. Just give me money for the booth, and you have your booth. And the booths were like cheap, maybe 1,500 for a booth spot. You can do whatever you want. Just pay me money for the organized for the spot. This is something that I feel has sort of now, having gone to the same expo, I've seen a decline of those kind of Ponzi scheme projects, but they still exist in crypto. And this is something that needs to be addressed. Another thing in crypto events still today, you ever see when you're networking in a event, like a proper conference summit, you see girls dressed and holding a little flyer, and, scan the QR code, they're dressed like models and things like that with their tits out and everything. Yeah, they're walking around, invest in my project. That's also...
It's like sex stars. Unfortunately, we sell coins,
It's a sex appeal. Yes, okay, you get the eyeballs, you get the audience. Yes, men come to you and talk to you. But what is the project you're shilling here? Is there any real substance? Would you ever see XRP doing this? Would you ever see legit projects hiring models to do this? It makes me think if they need to hire models to give this sex appeal look, maybe something's a bit dodgy there. But I don't want to judge and generalize. I will do my research about it and see who are the founders.
But another thing, beautiful people have the right to found a company, right? It's like I only invest in non-beautiful founders.
It's a great marketing tactic.
Today we talked a lot about different aspects from the founders, meme coins, different projects, and passion. For everyone and anyone watching today, what would you recommend, like a top 1 or top 2 things they need to look at before they invest?
So due diligence. Yeah, I said this before. Number 1 is the credentials of the founders. I like to invest in projects where I can have very, very visible transparency about who they are and their credentials. They should have a LinkedIn profile. They should have a Twitter profile that is showing their face. There shouldn't be hiding anything. That's number 1, transparency. I know the Web3 world is about anti-KYC. Your data is your property. I get it. But you're running a business here and you're trying to raise funds. You're trying to get people to, on board. You have to be clean. Who are you? I feel that's one thing. Number 2 is, so that's part of due diligence, the whole credentials part. Number 2 is, who are the communities? Like, who have you partnered with? Who have actually partnered with you? There's another credential boost. You partnered, and Bitget partnered with Messi for a good reason, right? And Cristiano Ronaldo partnered with Binance. I'm sure there was a reason for that. Mario Naufal, I won't speak on his behalf. Be careful as well. Who are these people you're partnering with? If they have proper due diligence in place about the people they partner with, okay, still do your due diligence in terms of what is their monetizing model? When can I make my money back? And really, the third thing is, are they active on social media? Like, are they posting content about what's coming? Are they fulfilling any of the promises they have fulfilled so far from the last report that's released to now? Where is their progress in their timeline, in their roadmap? What have they completed? What milestones? Really, it's really a full-time job following all this stuff. If you have a daytime, you won't be able to do this because you're busy. But really, it's just consistency. What they promise, who are the credentials, and who have they partnered with. That would be my advice.
Perfect. I think the golden advice. I do agree. You have to, more than even like a founders and all the hype, you have to look if they're keeping the promise, if they're releasing things on time, if they're doing that, test versions, if they're doing this, mainnet on time,
right.
Because we've seen so many promises that like really failed, and do not just blindly believe in a promise, and look and follow, and definitely follow the information that goes out. Thank you for the show. My guest was Adel, and I was your host, Fugar Usi.